Ladies and gentlemen, welcome back to the channel. We have a big update for Rezolve today. My fellow Rezolvians, something just flipped for Rezolve. Now, today was a great day in markets, and there's a lot of news that was positive, and we'll highlight some of that today. And generally, in this video, we're going to go over what changed with Rezolve today, how this changes the expectations going ahead. You know, I was bullish. I expected this week to be a good week. But what you're seeing today is furthermore confirmation of that. Now, we have some big catalysts coming in the next 2.5 weeks or so that are really going to push Rezolve to the next level, okay? That are going to get this stock back. We're so back, baby. Okay, things can change, blah, blah, blah. I'm not a financial advisor. I'm not a financial planner. Oh, boring, okay? You get the idea. Come to your own conclusions. Do your own due diligence, all of that. But in this video, we have some serious things to discuss for those of you that are serious about Rezolve. Do me a quick favor. Hit that like button. Subscribe to the channel if you've not done so already. If you watch these videos and you're not subscribed, then you're really just doing the Rezolve investing community a disservice, because these videos are going to be pushed out to less individuals that might want to invest in a stock like Rezolve. Now, if you guys want to take it a step further, come see all of the stocks that we are investing in the trading community. Check that link out down below in the description of today's episode. And really what we're doing over there is going out to find stocks like Rezolve that are under the radar, hyper growth AI opportunities. You know, we're looking for the companies that are not going to, fizzle out, right? There's a lot of companies, .com era, right, that just never survived. We're looking for the ones that are going to survive and thrive, the ones that are trading at severely discounted valuations compared to peers, right? Stocks that are literally under the radar. And 9 times out of 10, you got to look in the small cap areas, because those are the stocks that don't have a lot of analyst coverage. Those are the stocks that don't have a ton of investing bases, okay? Like, look at a stock like Rezolve. It has 10,000 followers on StockTwits. Even another stock that I really like called Rezolve AI, okay? They have 22,000 followers on StockTwits. Look at Rezolve. Rezolve has 10,467. That's actually up 100 in the past couple of days. So a little bit more attention on Rezolve. But still, like, almost nobody even knows this stock exists, let alone that Rezolve is projecting to grow at the kinds of speeds that is pretty rare. So, first and foremost, the markets today had a good day. That is great. That is good to see, okay? Fear is still elevated. The VIX is still sitting close to 21, but that was down 11% today. I think at the basic principle here, Bitcoin was having a liquidity issue. There were margin calls. Now it looks like there's some signs of liquidity coming in, right? It looks like we're going to get a rate cut. Fed Williams today came out and supported a rate cut. The odds of a rate cut jumped from 67.3% on Friday to 73.7% today. Last week, midweek or so, the probability of a rate cut was 36.8%. So the odds of a rate cut, you went from last week, no sign of a rate cut coming, to now, almost certainty you're going to get a rate cut. Now, this is important because the Fed always does what the markets are pricing in. For 40 years now, they've done what the markets are priced in. Okay, so that's why the Fed really doesn't like to go into Fed meetings when the odds are close. Okay, because you're going to upset the markets in some way. That's why it's not a big surprise when Fed Waller came out, or was it Fed Williams? I think Fed Williams came out and said, yep, I support a rate cut, after all of the economic data we were going to get before the Fed meeting was delayed. Okay, so we were expecting to get CPI and jobs reports and all kinds of things before the December 10th Fed meeting, and then those were canceled. Next day later, Fed Williams comes out and supports a rate cut. So you have Fed Williams, Fed Waller, Fed Bowman, and Fed Moran that all support a rate cut. You have Kashkari, you have Bostic, presumably that do not support a rate cut. You have Fed Hammock, Fed Collins, and Fed Cook that are kind of in the middle that have said they have an open mind. They're open-minded going into every Fed meeting. So that's where the odds are coming from. Okay? And then you have Jerome Powell, which would probably side with a rate cut at this point, although he's kind of the face of the Fed. He's supposed to be like the average Fed official, right? When Jerome Powell comes on the podium, he's not necessarily supposed to be addressing his own views, but kind of the collective views of the committee, okay? So that's where the probabilities are coming from. And I think simply you're getting liquidity in a market that's been basically begging for liquidity, especially in crypto. Now, Bitcoin recovering nicely. $88,400 per coin right now. The low was $80,732 at the low. So you've recovered quite a bit, and that is fueling some of this risk on. But as we've talked about on this channel for literally weeks now, strong economy, okay, or decent economy, an economy that is not changing too much is where we are right now. So a decent economy. 119,000 job ads for September. That's likely to be revised down quite a bit, but not recessionary, and that's important. The worst possible thing for markets, if you want upside in stocks in the near term, is a recession, right? That's the number one boogeyman, okay? NVIDIA earnings, great. I mean, not really anything to gripe at there. A-plus quarter. Walmart earnings. A-plus quarter, raised guidance, said that consumers are consuming. Not a lot has changed in the last quarter. That's about as good as it gets. If we really had a problem out there, Walmart would be warning the markets, okay? Then we had a strong jobs report. The pieces of the puzzle really starting to add up here. Now, today, you had major banks like JP Morgan and Morgan Stanley come out and say, hey, you want to buy this dip. 2026 is set up to be a strong year. And that couldn't be further from, or closer to the truth, I should say. I mean, while Wall Street has been panicking and finding every reason to try to justify the markets selling off when it was simply a crypto liquidity event, now they're coming back to reality. They're saying, oh wait, big beautiful bill next year is going to be positive. AI is alive and well, and the use cases will continue to grow. The investment into AI continues. Maybe consumer really starts to improve next year. Real estate starts to pick up, right? These positive things are starting to line up. Well, now Wall Street's like, oh wait, crap. We're underweight this market. Oh boy. We're about to have an end-of-the-year rally, and we're not positioned for it. So what happened? They're going to go out and buy stocks. The end-of-the-year kind of chase is beginning. This happens because Wall Street is underweight stocks, and 80% of hedge funds underperform the S&P. So if you're a hedge fund right now, you're up 7, 8, 9% on the year. The, S&P, NASDAQ up 12, 14%, something like that. You're going out and you're getting overweight this market right now. Okay, with all of the coast is clear signals, all the events we just recently had, now it looks like, again, we're going to be getting a rate cut December 10th. There's a lot more certainty out there. There's a lot less risk in markets unless something abrupt were to happen. And you're chasing, right? You don't want to exit this year underperforming the S&P. And that's why a lot of the time you get this end of the year rally, this end of the year chase. Now, we'll get to Rezolve in just a moment. Okay? But I think some of these AI stocks that have been beaten down so much unjustifiably are going to be the ones that come back to life so strong. Now, Rezolve doesn't have any specific news today, but we know there's going to be some huge catalyst coming soon for Rezolve. Okay? Dan Wagner confirmed this about a week ago. Okay? Right here. He said to Carlos Moda, Carlos Moda said his family office has a significant amount invested in Rezolve, that he needs an update to 2025 ARR. And he asked, when are we going to get an update? Dan Wagner says December. Let me put this as clearly as I possibly can. Rezolve is not legally obligated to report earnings until March. Okay, that's when they are projected to report earnings. Okay, Rezolve would not come out in December and voluntarily miss guidance. Okay, that's not what a quote-unquote fraudulent company would do, as some people have, put it. They try to make an argument to Dan Wagner's past and one company going bankrupt that dooms Rezolve, and that's obviously not the case. So what are we going to get in December? There's been talk about December 3rd. I don't know when the actual day is going to be. You're going to get a beat to guidance, in my opinion. There's a 99% chance of that. Because doesn't it make sense, Rezolve, if they were going to miss 2025 ARR targets of 150 million in ARR, that they just wouldn't share that until March? They don't have to update you in December. That is not a requirement. Now, Blueberry Coconuts says, if you make her rich, she will forgive you. If you make me rich, I will forgive you too. Announce the deals, report quarterly, and update current ARR. Simple. Dan Wagner responds and says, yes, sir. I take it as agreeing to announce the deals, report quarterly, and update current ARR, which Dan Wagner says they will do so in December. Reporting quarterly, that's a big one, okay? Basically, all European companies report quarterly, even though they legally only have to report on a biannual basis. I believe maybe in December, maybe on, earnings in March, they are going to confirm that they will report on a quarterly basis. That gets them up to speed, okay? Wall Street, they want to be updated on how companies are doing. They don't want to have so much gray area to, run wild with their own expectations or all of that. They want to be updated on a quarterly basis. Unless the standard goes to bi-yearly, which is unlikely in my personal opinion from a broader market perspective, then you want to see Rezolve report on a quarterly basis. So we know that Rezolve is about to beat 2025 guidance, maybe raise guidance next year. I don't know. I don't think that matters. Rezolve is trading at dirt cheap valuations, as is, trading at less than 2x sales. For next year's ARR guidance of 500 million. Crazy cheap. Crazy cheap. Any other AI stock you can think of or name in the comment section is trading far higher than that, with most of them trading at 5 to 10 times that valuation. Okay? But, again, updating on a quarterly basis, telling Wall Street we're going to report on a quarterly basis is a huge deal. But that's not what changed today. Okay, this is now the first close above the 200-day moving average you have seen since this crash really accelerated. Okay, that was on November 13th, where you were down 8.5%, you were down again, down 7%, and then you recovered from the bottom, right? Even on November 20th, when Rezolve hit a high of $3.73, and hit this 20-day moving average and got rejected, you still did not close above the 200-day moving average, which is at $3.08 per share. Today you did. Today you actually broke above this downtrending channel that we have been in. Closed above that. The next step is obviously getting above that 20-day moving average at $3.56. And I don't know, when exactly that's going to happen. It could be tomorrow. It could be on the next piece of news we get. I don't know. But it looks like you're set up now for an even larger move to the upside. Now, once you break the 20-day moving average, you want to break above the $4.15 area, roughly where the 100-day moving average is, as well as this prior uptrending trend line. Once you break above that, then you're looking at $4.89 89 cents as potential resistance at that 50-day moving average. But once you break that, you have a pretty clear shot to new highs. Now, I've talked about this for a while now. Well, first, let me cover this. The RSI as well. It's been sitting at about 30. It hit a low at 26, 24 or so, severely oversold, and now you're starting to curl upwards again. Okay, that's a great sign. Now, let's look at the MACD. The MACD also went positive today. Okay, the MACD is now positive. The MACD line is now above the signal line. That is great. Okay, that is typically a sign of a larger reversal to the upside that is coming. You've been negative on the MACD since back here on September 24th. If you want to see the chart here, September 24th, right here. And precisely that's when a lot of the trouble started for Rezolve. So MACD going positive today, RSI getting, a bigger break from that 30 level, seeing a close above the 200-day moving average with big catalysts coming in the next 2.5-ish weeks. And I'm excited with what I'm seeing out there with Rezolve. Let's make it even better, though. If you look at the shorts and what these short sellers are doing, they are dumping their short positions. Today, you have over 1 million shares being covered on. Okay? Short interest has went from 11% in late October to 4.36% today. I've never seen anything like that. I've never seen short sellers cover this aggressively in a stock that has had really no news. You haven't had that much news. Dan Wagner's went on, couple news podcast things. I don't even know what you'd call them, for the NASDAQ and Charles Schwab and the Schwab Network. Other than that, you really haven't had any new information. But yet, short sellers have covered in massive numbers. Rezolve only has 4.3% short interest. Basically, as an industry standard right now, AI small caps have short interest in the 20 range. 17 to 20% range is pretty much the standard right now for, shorting. So I don't know. What does that mean? Who knows something? Somebody clearly knows something. If they're covering like that, that's crazy. Now, one reason could be all of what we've talked about in today's episode. Another reason could be the extremely low valuation. I mean, $903 million market cap, projecting $500 million in ARR next year with over $400 million in revenue. It's kind of crazy. Okay, most AI stocks are trading at 5 to 10 times or 10 to 20 times price to sales that are unprofitable AI companies like Rezolve. Okay, so you're buying this one dirt cheap. Okay, and I think it's because, again, not a lot of Wall Street knows or even retail knows that Rezolve exists or what Rezolve is doing. Now, over on StockTwits, the sentiment is bullish at 71. Message volume is normal at 54. Participation ratio is normal at 50. So not too much changing over there. But as long as I'm correct, in my opinion, that we are going to get a year-end rally, a risk-on rally, a chase in markets, we get a beat to 2025 ARR guidance. We get Rezolve announcing they're going to report on a quarterly basis. And maybe, hopefully, like a contract update, announcement, maybe a partnership. Who knows? You're going to see Rezolve substantially higher into year-end. $8 to $10 a share would not surprise me. The valuation alone would support that. Rezolve could be a $15 stock right now, and it would be trading alongside other AI stock valuations. Okay? Rezolve could be a $5 billion company right now. And from a valuation perspective, you'd say, looks like other AI stocks. Okay? That's where some of the significant upside in Rezolve comes from. It's the valuation is crazy cheap. Okay, so those are my thoughts. That's my expectation. We do have, some economic data throughout the rest of this week. We do have a couple of earnings that might be semi-important to markets. You know, I don't think any of the economic data is going to change the Fed's stance on cutting rates, right? You're about to enter a Fed blackout period. I don't see any of the Fed officials that are calling for a rate cut right now to say, oh yeah, the data's too strong. Retail sales or durable goods orders over the next 2 days too strong. We don't support a cut. That's not going to happen. Okay, so I don't see the odds of a rate cut moving around all too much. Holiday shopping season is going well. It looks like there's about to be a chase in markets. Liquidity situation getting better. I think you almost have a perfect storm for Resolve to move substantially higher just over the next couple of weeks. Okay, so we'll see what happens as far as my position. I have, oh, hello. Okay. 14,500 shares in one portfolio. I have 11,300 shares in another portfolio. Then I have 1,000 shares in another portfolio and 1,300 shares in another portfolio. 28,100 shares total in Resolve is where I currently stand. Times that by $3.16. Total exposure in Resolve right now, about $89,000. I'm pretty roughly break even. Some portfolios down a little bit, some portfolios up a little bit in Resolve. I started buying the stock in the $2 range. I started averaging up in the $4 area, in the $3 range. So I've took my average up quite a bit. So on a cost basis perspective, I'm pretty roughly break even. Up a couple thousand, down a couple hundred, something like that on the total position. But I see Resolve as a 10xer into next year. And nothing of what's happened in the markets recently has changed my opinion, right? Nothing has really happened with the company. Believe that or not, the stock went from $8.50 to $2.60 at the low recently. And there's nothing company specific that has happened. Okay? But there are definitely signs that the situation is getting much better for Resolve. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.